morning. This is Horizon's Middle East and Africa, our top stories today. Oil jumps after reports suggesting Israel may be preparing a potential strike on Iran's nuclear facilities. That is raising further concerns about the fate of negotiations on a deal with the U.S. As the uncertainties around geopolitics and global trade ramp up, Fed officials are talking up patience as a virtue when it comes to policy. Plus, South African President Cyril Ramaphosa strikes an upbeat tone before meeting with Donald Trump in Washington. Well, it's just gone 8 a.m. across the Emirates, 7 a.m. over here in Qatar. I'm Jumana Versace in Doha. We are here for the Qatar Economic Forum powered by Bloomberg, getting into day 2 and another massive day coming up here at QEF. I will be speaking to the Trump Organization's Donald Trump Jr. Plus, look out for conversations with Oaktree's Howard Marks and Katie Coach from the TCW Group. So all of that is coming up today and more. We had quite a busy day yesterday, so we'll bring you a lot of the lines that came through from some of the panels and conversations that we had. As ever, let's kick off taking a look at some of these markets. So we saw a bit of a breather for equities yesterday. So after that massive run-up, we spoke about it yesterday, almost 20% higher from the lows we got to in April. We moderately dipped yesterday, and you can see today futures also leaning towards the red, down 0.3%. We also taking a look at U.S. yields as well. We've moved a little bit higher, back up to 4.5%. So we're about 2 basis points higher again as the fiscal situation in the U.S. comes under focus with the House looking to potentially pass this tax deal that President Trump has been trying to push through. So keep a close eye on developments there. U.S. dollar also slipping a little bit in trade today, down 0.4%. And then Brent, take a look at that. We're back at $66, up 1.5%. Why? Oil is moving higher because of a CNN report that new U.S. intelligence suggests Israel is preparing for a potential strike on Iranian nuclear facilities. So for more, let's bring in Stuart Livingstone-Wallace, our executive editor for the Middle East and North Africa. Stuart, I find this report interesting, and I wonder whether it's just saber-rattling or whether Israel is serious about it, in which case it seriously undermines the U.S.-Iran nuclear talks that are taking place.
Yeah, so I mean, I think a few things to be said about it. Number one, we've had similar reports in autumn, we had similar reports in February, and now we have similar reports again. It is absolutely true that Israel has been preparing to take out the nuclear facilities for many, many years. It's been a big concern, and the Israeli Prime Minister has appeared repeatedly in public saying this is the major threat to the region. So there's no surprise there. What appears to be different this time, potentially, is that it may or may not be coming fairly soon. As you say, the context here is that you have talks in the background going on. Trump is very keen on doing a deal. However, the Supreme Leader, that is Iran's Supreme Leader, came out yesterday or the day before, I think, and said it wasn't going to happen. So that's the context here. You know, should we expect something in the next few hours? Well, obviously, I don't know, but oil...
I just wonder how much of this is posturing as well. We also heard from the Deputy Foreign Minister of the weekend, and he said a 0% enrichment policy is a red line for them, which obviously is what some within the U.S. administration have been pushing for. Right. But from Iran's perspective, they need a deal. So I just wonder whether, again, from their point, they're just posturing in an attempt to get the U.S. to make concessions.
Well, I mean, I think two things. Does Iran really need a deal, or does it feel that it needs a deal, in the sense that it's the last card it's got to play is the nuclear option, you know, and it's enriched so far that it's probably not that far off it really wants to go that way. Now, whether that's a good idea is a different matter, but it's got not much else left. Its economy is in tatters, its proxies are not eliminated, but certainly degraded, its air defences are degraded. It's the last thing it's got, so does it actually really want a deal? That's something we'll have to see over the next couple of months. From Israel's perspective, you know, it may feel like this is the last chance to do it.
Yeah, and speaking of Israel, the ground operations in Gaza continue. The language over the last 24 hours suggests that the ceasefire talks have taken a turn for the worse. I was just reading that Israel have pulled their negotiators away from the Doha talks.
Yeah, although for consultation. So I think the technical level, it will continue. I certainly think the Israeli government feels an obligation to at least continue those talks, although, as you say, the rhetoric has not been hugely encouraging. And again, from the US side, clearly still very keen to have some diplomatic resolution to this. And then you've got pressure building from the Europeans in particular.
Yeah. Stuart, thank you so much for the update. That was Stuart Livingstone-Wallace, our executive editor for the Middle East and North Africa, over here with me at the Qatar Economic Forum. The European Union has lifted all remaining economic sanctions against Syria. The bloc's top diplomat, Kaja Kallas, says the easing is reversible and conditional on progress. Syria's foreign ministry welcomed the EU's decision, saying the move opens new horizons for cooperation. The EU began a partial suspension of restrictions in February, mainly on Syria's energy industry and certain banks. However, measures against the Bashar al-Assad regime and sanctions over human rights violations will remain in place. U.S. President Donald Trump's pledge last week to lift all sanctions on Syria gave the issue fresh momentum.
I know Secretary Rubio and President Trump want to engage cautiously. You know, no one is, to use an American phrase, no one's sort of Pollyanna about this situation. But we see an opportunity to work on two key interests of the United States in Syria. And that is making sure Iran doesn't come back and doesn't have a foothold there, and also making sure ISIS doesn't come back and have a foothold to have plots again against Europe and the United States.
That was part of my conversation with Morgan Ortegas, the deputy envoy for the Middle East. And you can catch all of that conversation online if you want to watch it. All right, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, we were talking about some of those U.S. markets losing a bit of steam. What are we seeing out of Asia today?
Yeah, really interesting how Asia stocks are managing gains on a day like this where there aren't much catalysts, so to speak, and we're seeing trading volumes on the region's benchmark also slightly lower than our typical this time in the session, but somehow you still see that bit of positivity. This is, of course, against the backdrop of some of these geopolitical uncertainties that's driving the energy stocks among those that are outperforming in terms of the region's benchmark. Also keeping an eye in South Korea on the pharmaceutical stocks that are doing well, along with South Korean shipping stocks. And this is as U.S.-South Korea trade talks resume this week. Now, aside from that, we're also keeping an eye on the stock of CATL following its trading debut in Hong Kong just a day ago. It is extending gains. We also had the likes of Morgan Stanley upping their targets for some of these Chinese gauges, citing improving outlook thanks to that tariff picture along with earnings. Now, aside from all this, the corner of the market that we're really watching is the Japanese government bonds. And this is against the backdrop of course, just a day ago, that disastrous showing from the 20-year auction in Japan, right? And this is the reaction we're continuing to see on Japanese government bonds, particularly on the long end. We're seeing it hitting the highest since it was issued way back when in 1999, based on the 30-year. And of course, against this backdrop, it's really those concerns about whether, with the Japanese central bank kind of taking its foot, continuing to do that off the stimulus pedal, whether the market can absorb these bonds.
Yeah, and that is the big question, I think, for many fixed income investors, not just in Japan, but people have also started setting their sights on the U.S. as well. Bond vigilante is coming alive again, Avril. Thank you so much. Now, South African President Cyril Ramaphosa has struck an upbeat tone before meeting with Donald Trump in Washington. Ramaphosa is hoping to repair frayed ties between the countries. As part of this effort, the government is planning to offer Elon Musk a workaround of local black ownership laws for his Starlink internet service. Jan Zabasaja is our chief Africa correspondent and joins us now. Well, we previewed this trip. It's going to be a pivotal trip for President Ramaphosa. There has been fraught energy exchange of harsh words between the two, especially coming from the Trump administration side. How much of an ask or how much of a challenge is it going to be for President Ramaphosa to repair the relationship?
Right, Jumana, excuse me, many people within South African circles and really more broadly are calling this a very momentous occasion in the history of these two nations, excuse me, bilateral relationship. We've seen a number of South African presidents meeting U.S. presidents, but of course, as you're mentioning here, this has been a quite tumultuous relationship for the past few months since Trump came back in office. We can look to a number of different factors. Of course, there's the issue and some of the falsehoods that Trump has purported out there about some of the laws that have been signed in South Africa. We have heard President Ramaphosa really shoot those down and say that is not, in fact, true. And then there's even pointing back years ago to the ICJ case that South Africa brought against Israel, which, of course, is not something that the U.S. has been happy about. And so many people are saying this is going to be a delicate line that President Ramaphosa is going to have to walk. But many people are confident that he can do so. He has been a master negotiator, at least behind closed doors, since the end of apartheid, and potentially he has some concessions that he can make. Many analysts are saying instead of coming to the table and trying to see a win-win for both sides, maybe you do look at ways that, South Africa can maybe make this a bit more beneficial to the U.S. There's also some other opportunities to sign deals around Starlink, of course. There's agriculture, there are minerals. So there are a number of things that he can bring to the table. The question is, what will this look like in front of cameras?
Yeah, the Starlink is going to be interesting, especially with Elon Musk being South African.
Right.
So he's going to be watching that meeting very closely, and he's been very outspoken about some of the ownership laws over there. But turning to the domestic economy, you and I, we've had many conversations about this budget that they've been struggling to pass. Another attempt today. What can we expect?
Budget 3.0 is what everybody is calling it. But, even the fact that we are seeing the president not present for this in Cape Town within Parliament is a testament to many people, many ministers confident that this will actually be able to pass. A lot of economists are suggesting and thinking that we'll hear from Finance Minister Ina Korongwana potentially about some budget cuts that they can potentially make. Of course, as you're alluding to there, we've talked about this for a number of months. There was confusion and also concern around some of the VAT taxes, or the VAT hikes, excuse me, that were meant to be implemented. That was scrapped. And so all of these parties seem to be able to come together now and finally agree on this budget. The question is, though, what exactly is the finance minister going to present at 2 p.m. local time? Economists, though, are confident about this, although they are saying this could potentially be a risk event, depending on the details, right? It's all in the details when it comes to the budget and the framework. But many investors really sort of on edge right now when you take a look at the South African economy and the stalled growth that we've seen over the past few years. So it's going to be important for him to fill a hole in order to actually start seeing some growth for this economy. So a big day in South Africa.
There's a lot going on, both internationally and domestically. Jen, thank you so much. Jennifer Zawazaja, our chief Africa correspondent, over here in Doha today, but usually in Johannesburg. All right, coming up, Barclays President Stephen Dainton joins us live here at the QEF to discuss the top risks for global markets. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Doha at the Qatar Economic Forum. Well, oil is rising, with traders also flocking to haven assets following a report that Israel may be preparing for a potential strike on Iranian nuclear facilities. And that is one of the market indicators that we're watching this morning. But of course, global markets in general have been rebounding over the last couple of weeks. To discuss the outlook and more is Stephen Dainton, president of Barclays. Good to have you with us. So equities are almost up. U.S. equities are up almost 20% since the scare that we had in April. How would you see the outlook for the global economy here? Do you feel like the worst of the uncertainty is behind us?
No, I think you've seen a number of investors take on board this uncertainty. Obviously, the U.S. policy direction around tariffs, immigration, now taxes that are causing a lot of focus on Treasury yields is probably here to stay. You have a substantial amount of uncertainty in almost every market. And that's why you're seeing investors flock to the safe havens, the traditional safe havens, gold, the Swiss franc, the yen, have all been major beneficiaries. Actually, you've seen people flock also to European equities as a place of stability, hence the performance of most of those indices this year.
How have clients been reallocating their portfolios on the back of those allocations? Are you actually seeing the flows going into the safe havens? Are they sitting on higher cash levels than usual?
You have definitely seen a move towards other safe havens. The traditional safe haven of the dollar is a question mark. And I think as we walk through the next 4-8 weeks, as a crystallization of the tax policy in the U.S. begins to emerge in the fiscal position of the U.S., but we have definitely seen investors move, as I said. European equities have seen a material advance this year, in particular with a focus on fiscal spending in Europe, Germany, of course, but also Italy and Spain, who have done exceptional things with their economies in the course of the last 5 years, are also seeing inflows of capital to them.
Yeah, interesting. A few months ago, people were talking about not just MAGA, but MEGA, Make Europe Great Again as well. So I guess it's backed up by the flows. The first quarter or the last few months were good for trading because of all the volatility in the market, and it showed up in some of the bank's earnings. What does the investment banking outlook look like? Because at the beginning of the year, I think there was a lot of optimism that this new administration was going to usher in a golden age for deal making and M&A. That hasn't quite transpired. What's your visibility for the rest of the year?
Look, I think what you saw in diversified businesses at most of the large banks was exactly what you would expect. You had heightened levels of volatility in all asset classes, in FX, in rates, and in equities. With that, you saw the wholesale business performing extremely well, and that was reflected in the first quarter earnings of the banks. The advisory piece of the business, the M&A, the ECM and DCM franchises were obviously softer with that level of volatility. But if you look at last week, when markets sort of stabilized, you saw a rush to issue many issuers. Actually, even here in the Middle East, we've seen enormous capital formation.
Yeah.
Outstanding level of IPOs last year. In fact, the issuance here in the Middle East was 44% of all of EMEA issuance last year. So I think as markets begin to find some form of equilibrium, in those markets where you find that equilibrium, you'll definitely have whether it's private equity firms looking to exit, M&A transactions emerging. So I think that advisory piece will start to balance for the rest of the year.
Let me ask you about private credit, because Barclays is one of the first to get involved in that space. You have your partnership with AGL Credit Management that received funding from ADIA. How do you see the outlook for private credit here as more and more participants enter into that space?
You're seeing a lot of capital try to find private assets.
Yeah.
Private credit over the course of the last 5 years has grown enormously. You can see that in the performance of a number of the alternative asset managers. I see it as a major piece of the capital segment for the future. I mean, you see that in excess of $1 trillion. You could easily see that continuing to evolve outside of just the US, where there's probably a little bit of a crowded market for private assets, but into other geographies. A nascent securitization business in Europe, that will happen here, of course. So I see a continued push into private assets in general. We haven't seen signs of a default cycle. That would be the major issue for private credit. And you have a lot of flexibility with that particular part of the capital cycle.
Yeah, and I just want to round up with Middle East and sort of your strategy in this part of the world. It's clearly a focus for the U.S. administration. Lots of headline numbers being announced. What specific opportunities are you seeing? And also in the wealth management space, typically Barclays is associated with investment banking, markets, but how much of an opportunity are you also seeing in wealth management given the influx of money into this part of the world?
I think you see very substantial opportunities in this region across all segments. Barclays actually has been in the Middle East for 50 years. We've been here for 50 years across all segments of our business, the investment bank, the corporate bank, and the wealth and asset management business. I think there is a very substantial opportunity as you see capital formation highlighted here today in Qatar, Qatar 2030, you have Saudi 2030. I think the vision of stability and long-term capital, in fact, yesterday you put up a slide of $4 trillion of AUM in the sovereign wealth funds. Yeah. So there is a very substantial amount of long-term capital here that I think is transforming in very separate industries. So great opportunities here for us to grow with a long legacy in the Middle East, and I think it's a fabulous opportunity.
Yeah, great. Well, also personally happy to see that you attended our conversation with the QIA CEO yesterday. Stephen, really good to talk to you. Thank you for joining us.
Thank you very much.
Stephen Dainton, President of Barclays. Well, coming up, Qatar's Prime Minister says there is a fundamental gap between Israel and Hamas when it comes to ceasefire talks. More from my interview here at the QEF next. This is Bloomberg.
This is just making us more determined to bring stability to the region, to end the war in Gaza, to free all the hostages and to bring them back to their family, and to provide security for both people. The rounds of negotiations that took place in Doha in the past couple of weeks unfortunately didn't lead us anywhere yet, because there is a fundamental gap between the two parties, which is one party is looking for a partial deal that might or have the possibility to lead to a comprehensive deal, and the other party is looking just for one-off deal and to end the war and to get all the hostages out. And we couldn't bridge this fundamental gap with whatever proposals we have provided, given the past experience of the first deal that it collapsed. And basically, we are stuck in a situation that, if this operation is starting, is just going to postpone the diplomatic conclusion of the war, which will end only diplomatically from our point of view, and will just cost us a death toll on the Palestinian side and also on the hostages side.
That was Qatari Prime Minister Sheikh Mohammed bin Abdulrahman Al-Thani speaking to me here in Doha. The Qatari government is the underwriter of the Qatar Economic Forum, powered by Bloomberg. Meanwhile, Qatar's Minister of State for Foreign Trade Affairs, Ahmed Al-Sayed, says advanced talks over GCC countries' trade deals are underway. Al-Sayed spoke with Bloomberg's Francina Kwa at the QEF.
In GCC, we are even in discussion and negotiation with different blocs. We are in discussion, advanced discussion with the UK, advanced discussion with the EU, advanced discussion with India, and also we are in advanced discussion with China and Indonesia as well, and Korea. So we are, as a group, we are, in advanced discussion to have a free trade agreement, which will enhance the position of GCC.
And a quick look at how markets are shaping up as we head into the break. So equity futures leaning towards the red, though a better session for some of these Asian markets. European markets not doing a whole lot today. Coming up, Elon Musk commits to leading Tesla for the next 5 years and plans to reduce political spending. More from our wide-ranging interview with him at the Qatar Economic Forum next. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil jumps after reports suggesting Israel may be preparing a potential strike on Iran's nuclear facilities. That is raising further concerns about the fate of negotiations on a deal with the U.S. As the uncertainties around geopolitics and global trade ramp up, Fed officials are talking up patience as a virtue when it comes to policy. Plus, South African President Cyril Ramaphosa strikes an upbeat tone before meeting with President Trump in Washington. It's just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Qatar. I'm Jumana Versace in Doha for the Qatar Economic Forum powered by Bloomberg. A check on your markets. We saw a bit of a breather yesterday for Wall Street. S&P up almost 20% since those April lows, and then we slipped yesterday in trade. Today, down about 0.4%. Treasury yields in focus. We were speaking earlier on in the show about the weak auction in JGBs yesterday, so that came very weak. On the back of that, you saw an upward move in yields, but also a bit of a push upward in U.S. yields as well as we continue those discussions around the tax cut extensions and tax plan that is going on in Congress right now. So 10-year yield sitting at 4.5%. USD slipping as well, down 0.3%. So that move, the push lower in the greenback, has continued in the last couple of sessions. And then Brent, as you can see, up 1.9% today as well. So we've jumped on back of that report that came out suggesting that Israel are contemplating a direct strike on Iran's nuclear facilities, which would be interesting given the backdrop of those U.S.-Iran nuclear discussions that are taking place. Now, Elon Musk says he is committed to leading Tesla for the next 5 years and plans to dial back his financial involvement in politics. He spoke in a wide-ranging interview at the Qatar Economic Forum in Doha with Michel Hussein.
I think in terms of political spending, I'm going to do a lot less in the future.
And why is that?
I think I've done enough.
Well, Bloomberg's Michel Hussein conducted the interview with Elon Musk, and she joins us now. Well, that was quite an interview. It was very long and covered a lot of different topics. So many headlines came out of it. I think one of the main ones, and we just showed a bit of that interview now, was him suggesting that he's going to be less inclined to be involved in political funding in the coming years. What did you make of those comments?
Yes, morning, Jemana. So nice to be with you. It was indeed a wide-ranging interview. We spoke for about almost 40 minutes in all. And I think the word you chose there, the suggestion that he would spend less on politics in future, is the right one. Because remember, it's hard to, perhaps I'm being a hostage to fortune here, but it's hard to imagine spending more than he did on getting Donald Trump elected, which was $250 million. So that is quite a sum. So spending less than that is not difficult. And so there is that context. Also, in his words to me here in Doha, he did leave the door open, in a sense, because he did say that his plan was to spend less unless he sees a good reason. And there are plenty of avenues in which you could see him deciding that actually he does need to incentivize politicians to get on board with much more of what he thinks important. There are things which haven't yet happened which he would like to see happen. For example, as our colleagues on the Elon Inc. podcast pointed out, he would like the moon program to be a full Mars program. So there are all kinds of ways, I think, in which he has left the door open. And it would be interesting to know what the kinds of conversations as a result in Republican circles and around the president.
Of a disclaimer, because he did say he would get involved again if he sensed the need to. And of course, midterms are coming up next year.
Absolutely.
But there's another comment that quite literally moved the market yesterday. It was a down day for the S&P, but Tesla was up on the news that he plans to stay on as CEO. So what did you get from that conversation around Tesla and his dedication to being CEO of the company?
Well, I put a specific time frame around him, asking if he was committed to the next 5 years, because we've known, obviously, since his last earnings call that, he had stated very firmly that he was going to be spending more time on Tesla. And he was very keen to emphasize that other than Europe, the brand is strong everywhere else in the world. The truth is, actually, they've been shipping fewer vehicles out of China month on month for several months now compared to a year before. And also, while Europe car sales are doing well for many manufacturers, Tesla hasn't been on that trajectory. So even where there are positive signs in Europe, Tesla is not part of that at the moment. So I think he does have a task to do. And as he indicated, and as the stock market believes from those movements, it seems that by putting more focus on it, by dedicating more time to it, by being full-throated and saying, I'll be the CEO as long as I'm still alive in 5 years' time, that's the bet he's making, and the market certainly responded.
You mentioned those European sales, so I'm just going to play a little bit of your interview when you asked him about what's been going on with those European sales figures.
Europe is our weakest market. We're strong everywhere else. So our sales are doing well at this point. We don't anticipate any meaningful sales shortfall, and obviously the stock market recognizes that, since we're now back over $1 trillion in market cap. So clearly the market is aware of the situation. So it's already turned around.
So it's undeniable that their sales are down in Europe. He framed it as being reflective of the industry as a whole, and that all auto manufacturers have been struggling in Europe. But of course, it is a massive decline for Tesla. And I wonder how much of that is the perception, the association of Elon Musk, the businessman, with Elon Musk the man who's also getting involved in politics. And you asked the question about political blowback.
Yes, and blowback is a word that he's used himself before, so he's acknowledged in the past. I think it was interesting that we did see the indications of the personal effect of this period on Elon Musk, because he was clearly upset at the violence against Tesla showrooms or Tesla cars and saying, we're going to come for you. But I think that the scale of the decline in Europe is very serious, because the figures I was looking at, and which he's clearly aware of, these are big markets. They are countries like the UK, countries like Sweden, countries like the Netherlands. In Sweden, for example, the decline is more than 80% in April compared to April a year ago. So he has got a serious task on his hands, and the picture for other manufacturers in terms of their sales in Europe is not the same. And of course, the other part of this is in EVs, they've got a serious challenge now from BYD, which he has acknowledged. That is growing fast, and this could end up being the year that BYD EVs outsell Tesla EVs.
Yeah, certainly it's been happening on a quarter-by-quarter basis, but we'll see for the full year. Michelle, great to have you with us, also at Bloomberg, and congratulations on a very headline-worthy interview. Bloomberg's Michelle Hussein. Nigerian tycoon Tony Elumelu says Gulf countries are showing more interest in investing in the African continent. The chairman of the United Bank for Africa spoke to Bloomberg's Jennifer Zabazaja here at the Qatar Economic Forum.
The Global South is beginning to look within the Global South for investment opportunities and for capital. So you see people in the Gulf states now showing more interest in investing in Africa. Africa is a great destination, but the farther away you are from a continent, the less understanding and tolerant you are of the continent. What people see outside of Africa are all challenges. But our brothers in the Gulf are gradually beginning to see opportunities beyond challenges. So we are seeing flow, but want to see an increase in capital flow amongst the Global South.
Talk about some of those conversations you've been having with brothers in the Gulf, as you're mentioning here. Have you gotten any commitments since you've been
Oh yeah,
talking?
First, United Bank for Africa, which I chair. United Bank for Africa serves 45 million people across Africa and the globe, operates in 24 countries, operates on 4 continents, helping to transform lives. We have operation in Dubai, and we're beginning to see more interest in investors in the Middle East looking into Africa.
What does that mean, more interest? What does that dig into it a bit?
They want to invest. They want to increase their investment. We are following Gulf companies that are doing business in Africa. We also are bringing investment opportunities to people in this part of the world. And it is investment opportunities that will attract capital. And so the more attractive your environment is, the more people understand the opportunities and the trick how to navigate challenges in your environment, the more likely they are to invest in your continent. So we are seeing a lot of that. But beyond that, we invest in electricity. We are increasing our electricity generating capacity on the continent. We invest in oil and gas because to us, yes, we believe that Africa needs to power its electricity from all sources, energy from all sources. And we are seeing more investment in these sectors, these critical sectors that we need to power Africa out of poverty.
We are thinking hard in terms of underlying risks. So the interest rate environment was much higher the past few years. Now we're thinking is how much should we allocate to fixed income, for example?
Interesting.
Right? In a world where there is a lot of challenges, you may end up investing in businesses that are not necessarily fixed income or credit related, but they have similar attributes and could offer you more growth. So to answer your question tactically, I think we're revising very deeply how much we should have in fixed income as a conservative asset class. And we're thinking very deep also some of the traditional asset classes that we have, and whether we need to increase or decrease some of those asset classes as well, like infrastructure and real estate.
Let me ask you a question about your AUM, because His Excellency earlier in the morning talked about the fact that new inflows are going to be coming in. What is your expectation for how big the fund is going to be by 2030?
We haven't run the final model, I'll be very honest with you.
Roughly?
We haven't run a model, honestly. I don't really have the exact number. Also, it will be bad because they may say a number and then underperform as a fund and not meet it. Because it would have to come from two factors. First, investing wisely to outperform and get there, and then the inflows. So I don't want to hold myself accountable for underperformance.
Okay, but assuming that the fund continues to grow in size, which I think is a fair assumption, we don't have to pin down a number. Is that going to change the way you invest? Because you will have to invest for opportunities that can give you scale?
Definitely. So QI performance has been strong, and we expect with some of the things we're doing internally for it even to be stronger. We strengthen it through specializations and focusing on the right areas and constantly revising and thinking about our asset allocation policy. But as the fund size grow in size, this will push us to have even longer duration on the portfolio. So we can take longer term bets and themes and industries and specific technologies or other businesses and take advantage of the liquidity premium to underperform. So I don't expect major change in the style, but I think it will be more refined and will focus on areas to take advantage more of our ability to have a larger fund and also think of longer duration.
Fair to say perhaps a bigger emphasis on direct investments then in the future?
That is Qatar, you mean?
Yes.
I mean, we have a good emphasis on direct investments. A lot of the partners we have been and think of globalization. A lot of them think about supply chain solutions, decentralizing industries. So from our mandates, it's our responsibility to pass them along and be the kind of holding the hand and try and introduce them to the domestic stakeholders to encourage them to think of Qatar as a destination. And starting as an investor is also good because they've seen when we promise, we stick to our words and we stood beside our partners in good time and difficult times. So it resonates when they think that you're inviting them to have business in Doha.
Yeah.
That was part of my conversation with the QIA CEO Mohammed Al-Sowaidi here at QEF. The Qatari government is the underwriter of the Qatar Economic Forum powered by Bloomberg. Middle East nations have pledged a flurry of investment deals worth trillions of dollars in the U.S. economy over the next decade. The deals came as U.S. President Donald Trump capped off a Gulf tour in Abu Dhabi that has seen major investment pledges from Saudi Arabia, the UAE, and Qatar. Joining me now is Anne-Laure Kiechel, founder and CEO of Global Sovereign Advisory. So let's just pick up on those themes, on the headline figures that were announced last week. As a sovereign advisor, how does that lend itself to opportunities for your own company in this part of the world?
Look, I think it's extremely interesting because the trend actually that we've been seeing over the past years has not been that of an increase of FDI. It's a little bit been the reverse actually, and people really kind of like recentralizing their activities in their home country. So to see such big numbers, while at the same time to also see that they were really directed to a region that has been, of course, very active, but usually it's between the US, the Europe, UK, Japan, that those things are happening, right? So it's extremely interesting. So for us, what it means is that it means looking into how to fund those projects, looking also how to execute those projects, and also just making sure that the money is actually well allocated. Because lots of it is done also out of public money, right? So it's important.
So FDI is a big focus for all of these governments, and it's a big part of their diversification strategies. But you look at the numbers coming out of Saudi Arabia, for example, they haven't hit their targets for last year. They will say that's a reflection of the global environment. What do you think are the obstacles that are getting in the way of them achieving their FDI objectives?
Well, first of all, FDI objectives are always very ambitious and sometimes too ambitious. So I think it's a little bit part of the game, number one. Number two, it's also between the number and the actual realization. I mean, you have some time lag. I think this is something that one needs to accept, right? Because execution is always slower than what you would have expected. And also, because indeed of the global environment, I mean, sometimes people are a little bit more cautious. Sometimes you downsize some projects. Sometimes you target more. So I think I see it as actually very normal, probably because the numbers that were initially announced, if you want, were over-ambitious for the period of time that it was considered, basically.
Let me ask you about lower oil prices. Lots of people are talking about the fact that it's going to put pressure specifically on Saudi Arabia's public finances. As a sovereign expert, how are you seeing the progression with Saudi Arabia's balance sheet, the sovereign balance sheet over the next few years, and also taking into consideration that a lot of the borrowing is technically off balance sheet?
Yeah, no, you're absolutely right. And I think clearly with the oil price, it's always a little bit of a perverse effect. What do I mean? When the oil price is currently where it is, let's call it in the 60 region, because it just rebounded, but let's call it 60. Yeah, I mean, you don't really 100% feel the effect right now. So this is an effect that you're going to feel actually within, I would say, the next 18 months. You always have a tagline. And same thing there also. When it rebounds, so assume that it rebounds back, you also don't see immediately the effect. You still also have to wait another usually 12 to 18 months to see the effect. So it's a little bit of a dangerous time zone, I would say, because it's kind of like the effect of lower oil price as well as when they're going to come back. So how do we look at it? For sure, Saudi Arabia has funded itself a lot through debts. That's very clear. It's a very, very big issue. So you have one good and one bad thing. The good thing is that when you really are present in the market, they have very active curves. They've issued in many currencies, also developed very tremendously their domestic market. This is a big plus because they have plenty of liquidity available. The big minus is that already a lot of people are exposed to Saudi Arabia, so they're potentially looking into their exposure. I mean, do they want to be exposed more and so on? So you're a little bit, I would say, caught in the middle. So you need to be very innovative with what you do, either finding new sources of funding, either kind of like rationalizing things, being very careful that you don't have distortion of your curve between what you do. And you're right, there has been some off-balance sheet also debt. So it's true that Saudi Arabia, and it was a political decision, decided to go full speed, full growth, full diversification very, very quickly. It, of course, comes at a price. And the price is to have debt and to have deficit.
The Minister of Economy always says to me it's a deficit by design. I do just want to round up the conversation with your perspective on some of the African countries that you follow and work with closely, because the big theme, obviously, is the global trade uncertainty, but then also the pullback in USAID. How do you see that impacting some of the big borrowers in the region?
Look, it has a huge impact. Why? Because indeed, you're absolutely right, USAID has been pulling back. But not just this, we've also seen a stop of MCC. We also have seen the US withdrawing for the African Development Bank. So you see all of this being combined. And not just this, what has happened has led to a rise of rates. And this comes at a time where a lot of those African countries have a lot of maturities to refinance. Because when we put ourselves back into the situation of COVID, what we did during COVID was to push back debt forwards, right? So now the debt that we pushed forwards now comes due. So it comes due at a time where the rates are high, where there is a lot of market volatility. So it doesn't mean that the market is closed, but it's not as open as it used to be to any type of borrowers. So what's going to happen? A little bit of the same. The big guys are going to be able to issue. They're going to issue at higher rates, which is not good at all for the debt sustainability, but at least there would be some availability in the market. But some of the frontier guys are going to find it extremely, extremely difficult to fund. And this is what I really find worrying, because when you don't really have access to liquidity, what happens is that you try to then pledge your resources, then you go to really kind of like creditors that are going to, it's going to hit you back, right? So it's a curve that we know is not is the right curve to go. And I'm a little bit afraid of this.
A little bit afraid. Okay. Really good to talk to you. Thank you so much. We've learned so much from chatting to you. Anne-Laure Kiechel, the founder and CEO of Global Sovereign Advisory. Now, coming up, Uganda's exports are surging despite losing preferential access to U.S. markets over an anti-homosexuality law. We'll tell you how it's managing to do that next. This is Bloomberg. Uganda's trade advisor says exports from the East African nation are surging. That's despite losing its preferential access to U.S. markets after enacting a harsh anti-homosexuality law. For more, Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Ndiro, how has Uganda been able to grow these exports despite the obvious setback?
Good morning, Jumana. So what they understood is that the UK is a big and a key market for themselves, and they had to find alternative ways of gaining presence. So they did a differential diagnosis, and through their trade representatives, they were able to establish consumption patterns. They went back home, organized their farmers into cooperatives to make the selling and marketing of their goods easier. They also expanded underwriting of credit, export credit, and also expanded their logistics and infrastructure network. But before the silver lining, there are a couple of pain points here and there. When they lost this treatment, their exports took a hit. Vanilla lost about 80% of its exports. Dairy was down by over 70%, and this affected jobs in the country. What they now understand is that with 10% tariffs on their goods from Trump's latest round of tariffs, and also AGOA likely not to come back, they need to begin exploring alternative markets. They're looking at China, where demand for coffee from China is up 15% in comparison to 2% globally. They're also looking at the Middle East, not just for trade, but also for financing, and also on the African continent. And this is what we will see across many other African countries, where they look alternatively at other places, but also we are likely to see bilateral concessions coming from these countries, because US is a big and a key market, particularly for countries like Lesotho, who've gotten a 50% tariff.
Yeah, as our prior guest was just talking about, there are some nations, specifically Lesotho, Sierra Leone, that are going to be exposed to some of the Trump administration's decisions. Bloomberg's Anne-Laure Kiechel in Kigali, Rwanda, thank you so much for the reporting. Well, stay with us here at the Qatar Economic Forum today. I will be speaking to Donald Trump Jr. and Amin Malik from 1789 Capital. Plus, look out for conversations with Ted Leonisis from Monumental Sports and Entertainment and the TCW Group's KT Coach. That's it for us. Daybreak next.